YouTube, what's good, y'all? I want to tell everyone thank you. I appreciate all the continued support in the channel and everybody who's been pouring in with the comments supporting me. Um, I honestly, I can't express, words can't express how much I appreciate everyone and the love and energy that I've been getting as it relates to me. Just basically, being courageous and just putting out information that I know for a fact that would help change people's lives. All right, so with that being said, if you find any value in the video upon completion of the video, please like, comment, share, and subscribe. All right, it would mean a lot to me and my channel. All right, but without any further delay, today's video is going to be the sauce. Today's video truly is going to be the video where I basically show you my strategy. All right, I show you the indicators that I use and how I look or how I use them to view price and how I use them to gauge entries and exits in the market. All right, so without any further delay, let's get into it. Let's talk about it. All right, so the very first thing, obviously, you already know if you haven't known from my previous videos that I've created. All right, I don't do anything without practice. I'm sorry, I can't. It's just not me, right? And so the place in the area or my sandbox or my gym, if you will, that I practice is in TradingView. All right, TradingView is simply just a charting software, very valuable charting software at that. All right, where you can play around with indicators, you can play around with all sorts of stuff, tools, and just kind of get an idea how price moves and kind of understand how the market behaves so that you can figure out some type of rhythm, if you will, or some type of edge in order to trade it. So first thing you want to do is go to TradingView. All right, that's what you see up here, right? All right, over here where it says symbol search. All right, you can trade, or should I say, you can search whatever it is you desire. All right, for the sake of the video, I'm going to show you all the following assets. I'm going to show you U.S. oil. I'm going to show you the Australian 200. I'm going to show you the Spain 35. I'm going to show the JP 225, the NAS 100, the US 30, and the S&P 500. All of these trades currently, as you can see, I'm sitting in profit on all these trades. All right, I'm up 28% on this. What is this on US 30? I'm up basically a percent and a half on S&P 500. I'm up 2% on what is that, NAS 100. I'm up almost 80%, or I'm sorry, 0.80%, which is almost a percent on JP 225. Right. The point I want to make though is we cannot just jump in anywhere in the market. All right. You have to have a statistical edge. You have to have somewhat of a strategy, right? You have to have something, all right? You can't just approach the market and just be like, I think the market is going up today, and then just expect the market to go up, because that's just not how it works, right? You have to have an edge over the market that helps you analyze or look at the market in a way where you can trade in the flow or in the direction of the momentum. And so I consider myself a reverse trend trader. All I mainly look for is opportunities where I expect the momentum to reverse and the trend to continue in the reverse direction. So one of those indicators that I can't trade without is called the Smart Money Concept Indicator. All right, it's by Lux Algo. Simply what you want to do is once you come over to TradingView and you pick the asset or symbol that you want to trade, you go to indicators, and then you just simply type in Smart Money Concepts. All right. For me, I already have it listed as one of my favorites, so you can see it's highlighted with a gold star. All right. And so once I activate that and I put that or apply it to my chart, that's how it looks. And simply what it is it shows price between a zone. It shows price between a premium zone, which is in between the equilibrium and up here at the top, the premium, and it shows price between the equilibrium and the discount, which forms your discount zone all up in here. All right. So how it works is anytime price is in the premium zone, it's considered overbought. It's here where we should be looking for opportunities for the price to start decreasing. Either it be traders taking profit, or entities taking profit, or whatever the case may be, or it just simply just being too high in value, this is the area in which we expect price to start kind of like tapering off and losing its momentum. All right. So the next item or next indicator that we want to use in order to kind of gauge the momentum of price. Now, remind you, over here, this right here, this candle right here, we're on the 1 hour chart, right? This candle that's currently being printed, you have to see right here. Here's the timer over here. As you can see, it's 4 minutes and 14 seconds and counting. All right. Currently, the price value of this asset, US oil, is being traded at $89.10. That's as of today's date, which is September 20th, and as of 3 minutes and 55 seconds left in that candle. All right. What I'm saying is, this right here is a real-time correlation of how it's being traded on the actual market. All right. So what we want to do is, after we've identified where price is in relation to our zone, then we want to add another indicator, which is called the zero exponential lag moving average. All right. Again, you just go over here, you type in the search, indicator search, and you type in ZEMA, and then it should tell you that's the zero lag exponential moving average. All right. What the zero lag exponential moving average now does is it plots this yellow line for the length of 200 candles and its average closing cost. All right. I know that might be a little bit difficult to comprehend or understand. So what it does is it plots this line, right, as each one of these candles form and close, right? So if this asset, which is US oil, is trading in greater value above this line, you should look for long opportunities, which is for the price to go up. Anytime price is creating these candles and they're closing above the yellow line, it means we're in a bull market. It means the asset is bullish, right? Anytime price is printing below this yellow line, it means that now the asset has switched bearish, right? Which means the price is starting to go down. All right. So once you throw on, or once you add your zero exponential moving average, you combine that indicator on top of the concept of understanding that anytime we're in the premium, we're looking for shorts. All right, this is so valid. I need you to comprehend. I need you to understand, right? It's here in this premium zone that we are looking for opportunities for the price to drop. But you just can't get in on any one of these candles. You can't just get in simply because, listen, you can't just get in just because it's up here, right? Because if you tried to get in right here, you still don't know where price is going to go, right? As we play this forward, right? You can't just get in anywhere, because this right here, all these moves, this can exhaust one's account. This could literally take your account out. So what you want to wait for is what's called a second confirmation. The very first confirmation is we entered inside the premium zone. As soon as we entered inside, you see how price came up here and started trading up here inside this zone? Well, you can't get in here. I mean, you can, but in here is not where you want to be, right? Because you want to be in the area where you can catch the greater probability or greater likelihood of price reversing, so you can ride the trade, or you can ride the trend, excuse me. You can't ride the trend right now. I mean, it's risky to take it right here, is what I'm saying. Because remember, the premium zone indicates that we already are overbought. So it's literally just a matter of time before we start selling off. Well, the next indication, or the next confirmation you're going to be looking for, is you're going to be looking for price to start trading below this yellow line. Not this, right? This right here is what you call a wick. It has to close below the yellow line. Not wick the yellow line. This is a wick. All right. So what you want to wait for is you want to wait for the red candles to start printing underneath this yellow line. And so as we play this forward, watch this. see, this is why you don't want to be trying to get in for the long zone here, and you don't want to just take the straight short yet. You see, you want to wait. Wait for it. Wait for it. Boom. This candle was your very first candle that closed below this yellow line. It closed completely below this yellow line. Then and only then should you be looking for the opportunity to enter for shorts. Because remember, this yellow line is measuring, it's being plotted as per the closing average cost of the last 200 candles. All right, it's being plotted as per the closing costs on average of the last 200 candles. So the minute we start trading underneath that, it's safe to believe, right? It's safe to believe that now the closing cost on average has started to drop. And it's in here where we want to take advantage and start trading and start basically cleaning up. So now we're going to play this forward. And we're into the market. We're in this trade. We're in this trade. We're in this trade, and you just play it out, right? But it's here where you need to measure your risk. It's here where you need to measure your risk, your stop loss, and it's here where you need to measure your take profit. And so I'm going to show you right now how you would do that. So after you've entered the trade, you set up your risk to 1%. And your take profit to 3%. And so this is how this trade should ideally look. All right, that's how this trade should ideally look. And yeah, you just let it play out. All right, and so I use this strategy, I use this method across all assets, across all markets. It doesn't matter. I use it on crypto, I use it on Forex, I use it on gold, I use it on everything. All right, and it responds the same. All right, and I'm not gonna sit here and pretend like it's a 90% win rate. No, it's not. All right, all you need is a 40% or greater win rate and the proper risk management, and you can remain profitable. All right, that's all you need. This is all you need in order to pass and get funded with one of the prop firms. All right, I trade with a prop firm. All right, if you haven't seen it posted on my channel or on my social media, right? I trade with a prop firm, and this is all I use. All right, I use simply Smart Money Concepts. I use the Zima. All right, I use these others as added confirmation, right? Because what they do is they add greater confirmation on top of what I've already analyzed or already established. All right, but it's the same thing. It's using the Smart Money Concepts. It's using the zero exponential moving average and just simply waiting for it to enter one of my zones and waiting for the crossover and then getting in for the entry. All right, once I'm in it for an entry, all I do is I come to the ticket order over here, right? And I put in my levels right here as per what's listed right here. So this level right here where my take profit was at 92.78, 92.70 whatever, like 92.76. I would literally put that right here, right? I would put 92.76. Excuse me. 92.76 would be my my stop loss, and then my take profit would be what's listed down here, 85.80, right? 85.80 would be my take profit. 85.80. And all you would do is take this information. I mean, you don't have to do this, but this is what I do. Take this information and transcribe it or transfer it over to MetaTrader with whatever broker or platform you trade on. All right, but you're really taking the same data from here, right? You're taking the same data from this ticket order, and all you're doing is you're transferring it over into your MetaTrader account that you're actually trading to get funded with. All right. So again, I use this same strategy across all assets. As you can see, right now I'm crushing it on oil, right? Again, smart money concepts. We look for what zone we're in. Now listen, here's an instance where price is trading. As you can see, this is the trend. We're in a downtrend. As you can see, there's more red candles coming through here or forming in this trend than green. So we're in this downtrend, and we just crossed over right here at the equilibrium. Now, I will tell you, um, this is not the highest probability trade that you would want to trade, but it's a trade that I took just based off my strategy. Remember, the higher probability trades are going to be the reverse trend trades, right? The ones where you're in the premium zone and it's crossed over going down, and the ones where you're in the discounted zone and it's crossed over going up. Those are going to be your higher probability trades that you're going to be seeking to want to take, right? However, just because I'm so familiar with the way that this asset moves and I'm so familiar with the way that my strategy works, I took this trade on Australian 200, and now I'm sitting at almost 1% of profit, right? Spain 35, same thing. Same thing, we got a crossover back here. Price started trading above the 200 moving average. Over here, it started trading above, right? Over here, it came back, and I got in it, right? Japan 225, same thing. You have the smart money concept tool. We were in the premium area. Remember, anytime price is trading in the premium zone, you should be looking for a short sell. Anytime price is trading in the discounted zone, you should be looking for a long sell, right? A long trade. So as you can see right here, price was trading in this premium zone. We add our zero exponential moving average to it. And then once price started trading, as you can see, I took long positions on here as well. I did. I took long positions on here, but I'm in the back of my mind, as I'm taking these long positions, I'm telling myself that the trade I'm really seeking to hit the home run with is the short. Remember, because the short is the one with the greater momentum, it's the one with the greater probability, because it's in this zone where we expect price to start breaking down anyway. And so once we got this set up right here and price started trading underneath it, I got in it, and yeah, you just kind of sandbag it. So that's the JP 225, the NAS 100. Again, smart money, throw that on there, and then boom, we broke, started trading underneath it. I got in on the very next few candles after, and been in it ever since. All right, here's my position. I got in on this candle, and here's my position. I got in at the price about, where is it, 15275.8. That's where I got in at. All right, so this right here is your entry. This is the entry tab. This right here, this gold tab, is going to be your stop loss tab, and this green tab down here will be your take profit. If this trade, as I anticipated doing, right, continues to play out, I don't have to watch it, I don't have to monitor it, right? It will come down here, and automatically at this level, it will go ahead and close the trade position, allowing me to take my profit, all right? And so that's how you set up the actual trade, right? I'm always risking only 1%. I'm always limiting my risk to only 1%, right? Right there, that's a little more than 1%, right? But I'm always risking my trade to 1%, limiting my risk to 1%, always 1%, and your take profit 3%. That's how you stay consistent. You have to limit your risk. You have to limit your losses, right? You can't afford to take losses that will exhaust your account. So again, here's US 30, right? Once we started breaking over, I was taking it for the cross on top. Price started trading above the yellow line, 200 moving average, and then price came back, closed underneath the 200 moving average, and it's here that I got back in it for a short. And so now we're still in it in short. We're up 0.31%. All right, that's the US 30, and then last but not least, here's the S&P 500. All right, the S&P 500, I'm doing pretty well, very well in it right now. Again, it's the same idea, same concept. We throw on our smart money concept tool. We add our zero exponential moving average. It gives us an idea how price is trading. Again, we just simply want to see price in zones. We want to see it in zones, and we want to wait for the reverse. We are looking to get the reverse. All right. We're not looking, like, for instance, right now, the trade has already moved away from us. It would not make sense for me to enter this trade in any way, shape, or form. The only way I would enter this trade now again is if price started trading back above this goal line. All right. So please, please, this is truly the sauce. Like, I'm not. This isn't smoke and mirrors. This isn't no get rich quick scheme. This is me sharing with you all how I've been able to be consistent in the market day trading, and me simply just sharing my experience and my journey with you all in hopes that it adds value to anyone aspiring to do this as well. All right. So till next time, I want to tell everyone I appreciate the love and support. Till next time, this is Penny the Dollar FX. Thank you. Peace and love.